And it's not, okay, all right. So hello everyone. My name is Nasib Fathi. I'm representing today Distributed Ledger Technology Austria, Austrian biggest crypto nonprofit. In parallel, I'm a scientific researcher working at Mozilla University Vienna, studying Bitcoin. So today's panel is not your keys and not your coins. Self-hosting versus centralized exchange under MiCA from a consumer's perspective. Speakers, I pass a word to you, so please introduce yourselves.
Hello, yes, a very warm welcome also from my side. My name is Oliver Stauber. I used to be a qualified lawyer in the capital markets field and crypto, and now I'm serving as the CEO of KuCoin EU.
Hello everyone, my name is Georg Harer. I'm one of the managing directors of Bybit EU. And also, like Oliver, I used to be a lawyer here in Vienna before I joined Bybit last year.
Hello, good morning to everyone. My name is Andrea Sacchi. I'm from Codema. Codema is an independent platform where auditable checklists are developed by stakeholders.
Hello, my name is Rirsch. I work with the Austrian Financial Markets Authority and deal with MiCA on a daily basis, also with these people here, so happy to be here.
Perfect. So let's get right into it, right? So this is the question to all panelists. Under MiCA, how do you see the balance shifting between self-custody and centralized custody from the average consumer's perspective? Let's begin.
Yeah, thank you. Very, very good question. So, as the title of our panel is "Not Your Keys, Not Your Coins," for sure, there was always the idea that consumers and users should not have all their assets always on centralized exchanges for various reasons. We can talk about that maybe later on a little bit. But as of today, I would say I did not see a huge shift, although we really in every information and channels and whatnot tell users to safeguard their assets, that there is a huge shift towards self-custody, to be very honest. I don't know if MiCA will change this in any way, because MiCA more or less should give more trust to the users that their assets will be for sure safely custodied also with us. But yeah, at the moment, I don't see a real trend in that direction.
I think MiCA, if you look at it, if you look at the past years, centralized custody has always been a thing, and MiCA has, at least from a technical perspective, not invented or reinvented it. However, from a especially retail, non-tech savvy customer's perspective, I think you can now just very simply recommend to a customer, if you're not tech savvy, go to a MiCA regulated company, because there you know at least there will be a minimum, it's a high minimum standard, a minimum standard of IT security, there's a mandatory safeguarding, asset segregation, and in my opinion, from a customer's view, that's the main thing that MiCA brought to the debate, should I do self-hosting or trust it to a centralized exchange?
Yeah, I fully agree, because I think the very existence of the regulation is in any case providing an assurance to the retail that is approaching something which is unknown. Then maybe the impact would be over the time, not immediate, because it depends also on the communication around the regulation, but I think it will go in that direction. Yeah, I agree.
Yeah, I also agree, which is good for you, right? So we haven't seen any significant shift recently, although MiCA has been in application for some time. It's also probably down to the fact that MiCA is intended to increase mass adoption, and most of the adopters coming in now are basically late adopters already, so they don't have this classic crypto bro view of what you want to do with crypto, right? Most of them, in our view, just see it as an investment vehicle that they can use, one among many. And so for them, it's less of an ideological issue to custody with a centralized player, and MiCA pushes in that direction. That's at least what we see.
Maybe to just add on that, it's not only about MiCA. Georg already mentioned it a little bit. If it comes to IT security, it's more the DORA part of things where we really forced like banking standard security to safeguard these assets. And this should also give some trust to the users.
All right. Now I have a few targeted questions, right? So for Oliver and Georg, what responsibilities do centralized platforms have in educating users about the risks of not holding their private keys?
So education is king. I always tell everybody. Financial literacy is a huge thing in general, but especially when it comes to crypto, which is even more new to the people. I mean, we live in Austria, and Austria is not very well known for having customers that are savvy in investments. So next to their savings account, seldomly they do something, even in old stocks. And now they want to go into crypto, which needs to be even more educated user. And yes, as a KuCoin, but I guess all of us and other initiatives like the Digital Asset Association, Blockchain for Europe, we really focus on educating users that they can do serious investments and also are not scared that with their first investment they lose everything. Nothing. The two of us, or none of our competitors has a reason why this could be a good thing. So we really want to have educated users that know what they're doing on our platforms.
I think maybe from another perspective, Bybit, as do many other platforms, we still support self-custody, for example, by supporting on-chain transfers into and from the Bybit account. But overall, you could say a centralized platform, especially for the retail customer, is a convenience feature. However, the underlying technology still is based on not your keys, not your coins, or if you want to say it more broader, code is law. So this is also what we see where there's a lot of educational need, for example, that we need to warn customers if you don't do the transfers incorrectly or the transfers out correctly, we can have the best customer support in the world, we still can't, reverse the blockchain. So this is also where we see the need for education. People started on a platform with a minor investment, they get interested, and then they want to try self-custody. But here we need to start educating them, now it's not your keys, not your coins, so you better be careful. And I think this was not really the case with traditional financial products because, let's face it, you as a retail customer never had the chance to self-custody your stocks, for example. But we hope that this will still be a thing in the future, that there's this self-custody, centralized custody, but even more so we need education of the differences between those and the dangers, potentially.
Okay, and now a question for Ralph. How does the regulator see its role in making sure consumers understand the trade-offs between self-hosting and using exchanges?
So we have multiple ways we do this, right? One is we're, as people can attest to, quite strict when it comes to looking at the actual information the CASPs provide. Mm-hmm. We have detailed discussions about what they have and don't have to tell their clients before they engage. This is one of the most important pieces because what the FMA stands for is clients have to have the information to make an informed decision, but in the end it's their own responsibility. The other thing we do is the FMA has significantly changed and modernized the way we also engage with the public. So there are different channels we use. We have a podcast now where we recently covered this. We send people to more speaking engagements, which is why I'm sitting here. We also use social media more, so we try to reach people. On this specific topic, it's not yet something that we have communicated in detail about as the FMA, but the more prevalent it becomes, we probably will also pick it up at some point. So it's we try to look at different positions, right, and try to attack this problem from different angles. But the most important piece is definitely to ensure that the companies themselves that actually do the business provide the information in a way that is understandable and fair for the clients.
Okay. And now the question for Andrea. How do rating agencies evaluate consumer protection and trust in this context?
Yeah, I think it goes in line with what the authority was saying, the authority you represent, because it's a matter of parameters. From the side of the authorities, what they check, for ratings is very important to have clear parameters upon which developing metrics. And this is also helping the user, because then you have something you can control. Can be 3, 4, 5, but at least you know what you have to check. Otherwise, the user is in the dark.
Okay. And now the question to all of the speakers. Not your keys, not your coins, right? This is a slogan born from distrust, clearly. How valid is this concern for in a MiCA regulated environment?
Sorry, for...
Not your keys, not your coins. How valid is this concern? Basically, this is a slogan born from distrust. How valid is this concern in a MiCA regulated environment?
Maybe if I may, I had my first contact 2012 with Bitcoin. Basically, then you had Bitcoin Core on your PC with a wallet.dat wallet somewhere in your file system, and maybe some miner running on the side, because you didn't have much choice. So I think looking now back over 10 years later, I wouldn't say, this is the thing you should go for, but you have a choice. And like with every choice, there's upsides and downsides. You can still have your Bitcoin Core if you want running on your PC. You can still have your paper wallet or all the advanced solutions. But I think it's also perfectly fair to say, okay, I don't want to risk it, setting up this whole system by myself. I'm willing to go for a centralized exchange. But as I mentioned before, I think in general, for a European customer, I would, of course, I would recommend Bybit, but if you say, you want it company neutral, I would definitely recommend go to a MiCA regulated platform, because this is the only way how it can be guaranteed that the custody has been checked and is regulated in the way it should be. So especially that your coins are actually there.
I mean, I can add on that by saying that, especially what we said before already, MiCA, DORA, and all these rules and regulations are here for the only reason to build trust and tell the users, look, if you trade with these guys, the regulated ones, you should be safe at least. There can always happen, I don't know, huge things like 2 weeks ago, something like AWS server was down, which was hitting a competitor of us quite hard for a couple of minutes. But something like this in a IT world, could always happen. But next to that, first of all, we do everything that nothing happens. And our regulator for sure is keeping an eye on that. This is also very important, that we are supervised the same like any TradeOffs, banks, whatnot, so that should also give some trust. And trust is everything when it comes to investments. So I would also agree with Georg and say, okay, if you want to trade crypto and a lot of other assets in the future on-chain, let's go with a regulated player.
Okay.
Maybe I can cut into that. Well, so I think the slogan is still true, because I'm a Bitcoiner at heart, right? So I can't say it's not. What you say is correct, right? The centralized space is becoming more and more professionalized, and we also see that Austria has made huge leaps when it also comes to building knowledge, building expertise here. Still, in the end, it's a decision that the client has to take. It's ultimately you have to trust the exchange, the platform that you go to, the broker you go to, if you want to leave your crypto on there, and it's a convenience versus a security question, and also how adept you are at doing it. But MiCA doesn't fundamentally change the slogan, right? It is still true, and it will always hold true. And I think people have to keep that in mind. Nothing is perfect. Supervision isn't perfect. We will never see everything that happens. We will never be able to make everything completely safe. Otherwise, nobody can do business anymore, and no system is completely safe. That's also why we always say it's not just about the question whether or not you custody with one specific service provider. It's also a diversification question. Like you do it with your investments, you also probably want to diversify based on use cases you have, stuff you want to have long-term, you may want to self-custody, stuff you want to use for trading or you want to stake. you would probably have with the service provider. It's a very nuanced question, but I really want to say from the FMA's perspective, this still stands.
All right, so next question is, unless Andrea wanted to elaborate on the previous one.
No, I was just listening, and I agree with this because it's a matter of the target of the users also. There is a differentiation of uses from one solution, from the centralized, regulated, and the self-custody, of course. Mm-hmm. You have different tools.
Exactly.
Maybe an interesting example of the old economy, more or less, is gold. You know, you can have gold shares, you can have gold derivatives, or you can have actual gold in your safe at home or at the bank. And this is also kind of your risk appetite as an investor, and you should take this informed decision that Ralph said before.
Yeah, exactly.
Next, this is an interesting question, right? What risks remain even under MiCA for consumers who keep assets on exchanges?
For sure, there are always risks. You know, I mean, if you deal online, and if you, as I said before, there's a lot of huge, very important technology players around that most of us are taking into their products and services, and always there can something happen. But what you can also see, and I always love to bring this example, these guys unfortunately had a huge hack at the beginning of the year, you know, but no single user was harmed by that huge hack. And the whole industry was coming together and supporting each other, that at the end of the day, no users was badly impacted. Even there was some profits afterwards. But to compare, for example, with TradeFi, when we had the huge financial crisis after Lehman, 2008, 2009, sometimes I have the feeling the banking industry still didn't really recover from that incident, you know. And these guys managed to solve this issue within a weekend, more or less. And this, I think, is very impressive, and also should give some confidence to the users that this industry is mature and is also can be trusted as a service providers.
I think if we talk about remaining issues, you can have the best technical solution. It will always be operated by a human, and the human is very vulnerable to attacks. In a corporate setting, we do things like a 4i principle, or even greater ones. But we also see this very often, that a consumer claims to have hacked, when in reality they were just socially engineered to transfer them funds. And this, for example, brings us to the topic: if a scammer convinces a person to transfer, let's say, the Bitcoin out of Bybit to an unhosted wallet, we can't do anything. We do try to employ certain tools, for example, that I won't go into detail, but if certain changes are made, that transfers are blocked, of course we are getting reassurances at certain levels. But ultimately, if you as a human are tricked, the best technical solution cannot help you.
Okay. Yeah, I think that in this sense, the definition of common good practices and all this level would facilitate, on one side, the operators, and on the other side is facilitating in some way the authority in the inspection, because there are at least some, let's say, there is a state of the art that can be mapped, and where you can see immediately if someone is in a direction, in the good path, or in another direction. I don't know, what do you think?
Yeah, so for a regulator, this is actually a dream world, right? Because the custody piece, we can actually look at ourselves without having to rely on the data that we get from the companies. Or at least we can do it ourselves. But what is more important here, I think, is all the risks still exist. They just get mitigated better, hopefully, right? Because regulation itself does not change the risk landscape whatsoever. It's what the companies do and what they do in cooperation with the regulator, how they try to mitigate these risks. So people should not think that suddenly we're in a different world just because there is MiCA and DORA. It should help mitigate this risk. It should help make you aware of the risks, but it doesn't change anything. As you say, there is still fraud, but there is still ICT risks. There are all these kinds of issues that we have, and we have to continuously work because the devil never sleeps, right? So it's not something that is a static issue, and now everybody is freaking out about quantum computing, although it's probably not going to break crypto, but something new is always going to come up. So we shouldn't think that MiCA significantly changes anything here.
Maybe to add on that, what we didn't talk at all by now is social engineering is the one thing, but now artificial intelligence is coming. And it's really crazy what scammers are already doing right now. And please, everybody out there, be super curious always, even if on Telegram, WhatsApp, whatnot, you are contacted by a friend of yours asking you to jump on a quick call or whatnot, and then ask you to whatnot, download or talk too much. You would even think in a video call, this is your friend sitting on the other side of the laptop or the phone, and try to convince you to do anything. You know, please be super curious. The artificial intelligence and the scammers that using them is getting better and better, and it's really going to be an issue in my point of view in the next couple of years, how to prevent users from getting scammed, not only with crypto but also for your bank accounts or whatnot. I'm really afraid of that, to be very honest.
Now let's draw the parallels, right? What risks do consumers take on when self-hosting or choosing self-custody, especially in terms of loss, theft, or technical complexity?
I like comparisons. And questions to the audience. Did anybody of you or any relative ever try to brew their own beer or wine? How did it taste?
It was okay, but the beer, not the wine.
Yeah, so I think it's like this, you can totally do it, but to get it right, it actually takes a lot of effort. And also you can do it wrong in so many ways if you compare it to just going to the supermarket and buying a good bottle of wine. The whole situation, of course, changes if you are looking into something very specific or you want to do professional, wine or beer brewing. Then you might have the resources to do it properly, but this is a difficult thing, especially depending on the amount you want to invest, the time you want to invest. Very often, I would say, for a retail customer, the effort you need to invest to make it technically, operationally secure is probably not worth the risk.
Maybe I can come in here, right? I don't know if it's not worth the risk. It depends on what the user wants, right, and what they're willing to invest. And as you say, the larger your investment becomes, also relative to what you have, the more relevant it becomes. But there are also solutions in the market that make it quite easy. I mean, I'm not the biggest tech guy, and I self-custody a lot of my things. Of course, and it's understandable that especially with MiCA, CASPs have a significant interest of having assets on platform. That makes absolute sense and is not a bad thing in itself. But I think it's important to always be very fair and clear when it comes to communicating the pros and cons, which in our view, Austrian CASPs are quite good at, right? Because there is a lot of back and forth with us on how to word these kinds of things. But it's important that they not only see the downside and not the upside, right? There is an upside as well. And one thing that is quite specific to Austria is also in Austria you have a significant legal issue when you self-custody, especially when it comes to divorce or death, right? These kinds of things are easier to do when you are on a centralized CASP, and it's still something that has to be resolved. So this is the one thing I'm willing to say, right, that is specifically better when you are in a centralized environment. The other things are more of a give and take.
Yeah, exactly. Also, just to be clear, I didn't want to, say self-custody is bad, but you mentioned it. To get into self-custody, looking at it isolated, getting a hardware wallet or something, it's relatively easy. But as you mentioned, if you yourself die and didn't think of a way of someone else providing access, if your house burns down, all these extraordinary things that still happen, there is a downside. So as I said, overall, I would also, and I think that's also very important to know, you don't have to be in this side or that side. You can totally have 90% of your assets in a centralized exchange and 10% in a self-hosted wallet, or the other way around. So at least for the technical curious, there's also nothing preventing you from just experimenting with it, as long as you know what the downsides are.
And it also depends on the investor for sure. If I just like me buy and hold, it's absolutely okay to have it everything on self-custody, because anyhow I do nothing with it and storing. If you trade every day or every minute, then it's a little bit uncomfortable to always do it with a self-hosted wallet. But coming back to your question, more or less, for sure the obvious reasons like losing this stress or safe-hosted wallet, but there are more and more very interesting solutions coming onto the market, solving these issues. For getting your seed phrase or whatnot, you need to really think of how to use that stuff. But this is for sure also getting better in the future. But the legal topics, like Ralph said here, like divorce and inheritance, this is also going to be solved soon, I believe. There are some very interesting projects on the market that try to tackle these topics. And it's still also not solved easily for us brokers and exchanges, because if, for example, someone dies, it's also for notaries, for example, and others quite hard to demonstrate with us how to then transfer these assets to the inheritance. Yes, thank you. Excellent. Yeah, I guess that answers the question.
All right. So the question for the regulator: does MiCA risk stifling innovation in self-custody solutions, or does it create a safer framework for them to grow?
So that's an interesting question, very hard to answer in this format, but I'll try. So what MiCA does is actually, it doesn't really look at self-custody. Right? It doesn't regulate self-custody. What it does, however, it professionalizes the touching points with centralized exchanges, because you have to have more clear information here, so there it could help. On the other hand, what MiCA kind of missed doing, because what legally isn't possible, you always have, when you do a self-custody project, when you run a company, you want to have legal certainty. And because it is not regulated in MiCA, and you cannot get an exception under MiCA, for instance, right, as you have this in other jurisdictions, MiCA did not solve the issue that we had under AML rules, where you don't have a negative passport, right? So you can align with the FMA all you want. We say it's nothing, and then you do it in 15 different EU countries, and suddenly in 2 of them it is a problem. So this is one thing where MiCA, because it has ramped up, and it will ramp up enforcement, is probably going to be an issue for these kinds of projects. On the other hand, there will be more professionalized knowledge in the markets as well to make it easier to get professionalized services, find out where you actually stand. So it's a bit of a give and take, and MiCA kind of missed the opportunity because it dodged out of the entire DeFi issue to create a solution for companies that are crypto or crypto adjacent, but not within MiCA, to actually get something like a no action letter or something like an exemption to be safe when doing their business across the EEA. So this is a significant issue that still exists.
Mm-hmm. Now the question for Andrea. Yeah. How do ratings and assessments reflect the consumer's ability to judge safety and reliability under MiCA?
Yeah. I think that for the user, having an idea of what to check is one of the best way to understand the reliability. Because as long as you speak about trust generally, but you have no indication of trust, not clear indication, it's difficult to judge. When you buy a car, you have some indicator, you know, about the consumption, you know, about in how many meters you stop at 100 kilometers. So you have several parameters, and then you can decide, but it's something concrete. Just a general perception of trust is not enough. then rating is supporting, apart from the metric itself, where you have an indication, but to identify some key parameters that yourself you can check and compare one with the other and the other.
Mm-hmm. Should exchanges be obliged to offer integrated self-custody options or smoother transitions between custodial and non-custodial solutions?
So I think in an open democratic society, nobody should be obliged to integrate anything into their business model. It's a free market. But I would say the other way around, integrating self-custody, especially what Ralph also mentioned, that the whole DeFi part essentially is explicitly not regulated. But it's also, it would be better if it is regulated, but you get a free pass essentially. And it's sometimes difficult to interact with the DeFi world as a centralized exchange. So I think if the legal framework, the regulatory framework provided more clarity, I could also see that more industry players would follow.
I can only support that. It's for sure not a technical issue, it's more a legal and regulatory topic, and I also would love to see that. It would help us a lot to get this clarity, to have a better offering for our users.
Mm-hmm. Maybe from the regulator's perspective, this is ultimately a political decision, right? Yeah. That it was not made for MiCA 1. I don't see it being made for MiCA 2 currently. We have no indications. Okay. But ultimately, as you say, in a free market society, you can decide what you offer, and if the clients want it, the market will move that way. What we definitely will not do as the FMA is enforce something without having a legal basis for it, so nobody has to worry, because when these kinds of questions come up, so there is not going to be gold plating in this regard.
Mm-hmm. Let's take a look at the future. What do you think the future consumer landscape will look like in 5 years? More centralized custody or greater adoption of self-hosting?
I think it will be more centralized hosting, for the simple fact that when we think about crypto now, we think mostly about Bitcoin and other cryptos. But I think in the traditional banking, especially payment world, a lot of crypto-enabled features with stablecoins, CBDCs will start to be normalized, and those will most likely all be custodied by a centralized exchange or financial player. Mm-hmm. And just by this fact, I think it will go more into the direction of centralized hosting than self-hosting.
I see.
I fully agree. It's also, as I said before, this push to mass adoption will lead to people coming into the market that value convenience over the self-custody aspect of independence. Also that know less about the products, probably. And we've seen this in other parts of the financial markets where gamification, commodification, where people actually interact less actively with their investments from a cognitive point of view, have become more prevalent. So it seems unlikely that this completely shifts and people suddenly become super aware of their own security issues with custody and move away from centralized exchanges. I think it's going to be the other way around.
Yeah, I think that also some hybrids model will come out probably in the future, merging or developing something new. And a key element would be also the portability and standardization around that, because then you can shift from decentralized to centralized and creating a common field, a fair situation. Otherwise, if you have two different scenarios, that becoming critical.
Mm-hmm.
Yeah, I also see it like this. The only thing that I maybe also see the development of self-custody wallets and their usability will also improve a lot in the next couple of months and years. And this could still either, if the regulatory framework would allow it, be then implemented with centralized exchanges or brokers, or will have users easier using it at the end of the day, and then maybe some of them or a lot of them will also make use of it. However, the major amount of users and transactions will still be on brokers and exchanges.
Maybe it's not technically directly crypto, but I'm also curious what will happen to the digital euro, which in my opinion looked very promising, but it's questionable whether it will reach its goal. And I'm mentioning it because it also has an at least offline feature, which is, I wouldn't say self-hosting, but a similar idea of being able to make P2P transactions without internet and an intermediary. Let's see how this works. If this will be maybe integrated into some form of CBDC or centralized stablecoin. Yeah, it will be quite interesting where this is developing into.
But this would have been the perfect solution. They just denied it at the end of the day,
I know.
unfortunately.
I can only repeat this again. We would just have needed a stable coin, copy-paste one of the...
Digital euro, CBDC, everything's fine. Yeah, but yeah, let's see. At least at one conference, Ms. Lagarde said she recognizes the innovation potential and of blockchain and CBDCs. But yeah, let's see.
I have another interesting question. Not spicy. Could MiCA serve as a global blueprint for balancing consumer protection with crypto sovereignty?
It was the first one, major framework at least. However, now I spend a lot of time, for example, also in Singapore or in UAE, where they also have very, very sophisticated frameworks for crypto as well, but maybe not that strict like in Europe. Same is coming true now for the US, most probably. But when it comes to user protection, we are still raising the bar and are world class, I would say.
Yeah. For user protection, I would say yes, but also, and even though I value that in Europe, consumer protection has a very high level, but if you look at other jurisdictions, other factors are very important too, and I think MiCA is not perfect in other ways. So one example that I think we're all struggling is actually bringing assets to the market in a legally compliant way, where especially with crypto, it's clear you can't just outlaw it. A very good example is USDT, which is not MiCA regulated, and therefore cannot be offered, publicly offered in the EU, but it's still by far the biggest stable coin. There's some blockers where I would say at this point nobody knows if ever and how this will be solved. There's no digital euro stable coin coming up anytime soon. And as I said,
maybe Raiffeisen is doing it here now together with the others.
So this is what I feel with MiCA, that yes, the consumer protection part is very strong and maybe a role model, but there's some other things which look into the market, into product development that are not as groundbreaking.
Yeah, I can agree. So the consumer protection stuff was actually done quite elegantly in MiCA, because comparative to, let's say, MiFID II, where they went into a lot more detail, they left more up to the market on how to resolve it and kept it higher level, and that's probably also why it works quite well. And of course, there is going to be more and more guidance and more complexity from the ESAs, but still that works quite well, and is also received well abroad from what I see discussing with other regulators. On the liquidity/stablecoin front, the EU just took a different decision, right? It was a decision that had different reasons. I have my own personal views on this, which maybe don't coincide with the FMA's views, so I'm not going to talk about them too much, but there was definitely a decision made against innovative business models, especially in the stablecoin space, for the perceived benefit of monetary sovereignty. It was also the driving point of why MiCA was made so quickly at the time, because we know there was this Facebook Libra shock and everybody freaked out, and then this half of MiCA is basically about stablecoins. And the way it was done is also highly reliant, especially on the single currency stablecoins, on already licensed players within the banking space, actually. And this is something that may have to change to keep Europe competitive in this space, because you basically have to have one of the biggest licenses there is to be able to issue such tokens, and other countries, especially when you look at the US, take a completely different approach. And if we want to get rid of this US dollar dependency, we will have to have strong euro stablecoins, which currently there are some, right? And it's growing, but it's still, as you say, USDT is still by far the biggest. And Europe will never, hopefully, live in a completely isolated liquidity world where we don't share liquidity with the globe. And the US is still the global reserve currency, so it's a bit illusionary to think that we can just like change all of this by creating a law.
Yeah, so also like just from a day-to-day issue, I as a European would like to offer all the European customers directly euro to all the 500 coins that may be interesting to them. But due to the fact that most of the market is US dollar determined, it's just not possible. So we may have the best consumer protection, but what in fact may be much more beneficial to the customer, meaning that they can buy directly with euro certain coins for a very, very reasonable fee rate, is not possible, because as you said, some decisions were made which are at least questionable, and we'll have to see in the long run how this turns out for the European market.
In my view, for MiCA, the challenge is the real implementation. So how you really transpose the regulation in the application, the detailed requirements. Because there are different countries, different implementation. This is not good for MiCA over the long run. Of course, it's a new thing to adopt, but the key element would be the implementation.
And maybe from the innovation part, when it comes to products and other topics, for digital assets like tokenized stocks and so far and so on, we already have DLT ballot regime and stuff like that. But in other jurisdictions, they are even much more innovative as well. Like for example, the UAE, you have the land register on chain. You know, Austria was the inventor of the land register in the world. But we still don't think about having it on the blockchain, which would be a great use case. Same for example, for the personal identity, you know, the e-identity, which would also be a very nice use case for using the blockchain, even making it easier than for us for KYC and other topics, and are also could save us from being impersonated by perpetrators. So there would be a lot of interesting use cases still that not only are just stablecoin or cryptocurrency related, which would also help the whole industry. And currently, unfortunately, I do not see anything like this in the discussions with politicians and parties coming up even in all Europe.
Mm-hmm. Now the final question for all. If you had to give one piece of advice to a European retail investor deciding between self-hosting and using an exchange today, what would it be?
Do your own research and not your keys, not your coins.
Short and
Also, do your own research and think about how much time and effort you want to spend on caring for your assets.
Okay.
Well, good question. As said, it depends on the target. So to increase the information over the whole matter. And in this sense, I think that much more communication for this sector would be good. Institutional communication. There is few institutional communication because the communication that passed over the last years was not good communication, or partially good, let's say. But institutional communication will support the sector to increase because people will know more, and knowing more will adopt more, and also in a better way. So be more aware about the best solution for yourself. So communication, I think, would be a good point.
I'm going to say what the FMA always says. We don't give investment advice. But it's diversify and educate yourself. And diversification, not just, as I said before, from an asset portfolio point of view, but also from your custody perspective. You don't have to only use one cusp, although you may want this, right? You can have multiple ones. So you have more points of failure, but at least you have smaller failures when it happens, and it's unlikely that everybody breaks down at the same time. And the same when it comes to self-custody, right? You don't have to put all your eggs in one basket. And the most important thing is don't do anything you don't understand. It's when it comes to investing, when it comes to custody, it's always the same. Only engage with something where your money is on the line, where your livelihood is on the line, when you really understand what you're doing. And before that, educate yourself.
Good point. Yeah, maybe some questions, right?